Good afternoon. George Cavaligos for HFT Bonds and Notes. Like we spoke about in the morning email, choppy, range trading, hard trade. Buy them when they look bad and sell them when they look good is the hardest thing to do in the world. We were lucky enough early this morning to catch one of the sell-offs, and then scratched a couple trades that were probably good scratches because I was looking for some follow-through maybe, and we didn't get it. And then kind of got frustrated, and a lot of different trades go that we should have taken advantage of. But move on. What are we looking for? Non-farm payrolls Friday. Jobless claims on Thursday. ADP tomorrow. We're going to start getting that data, and people are unwinding positions. We saw the big drops in open interest the last couple days. I wouldn't be surprised to say there's another drop in open interest today. Another inside day. I think this is the third inside day in a row if you're looking at just the subcontract charts and not the active rollover charts. And I don't see us getting out of the range until Friday's number. Trade the ranges. Do the hard trade. When it looks bad, buy them. When it looks good, sell them. I just posted a couple levels in the chat room. There's a narrow range and then there's the big range. The big range is basically this week's high, 141.14 area and 129.30 area, and last week's lows. What was it, 128.20-ish and 138.20-ish, I think. I'm not sure on those lows, but you can look at those on the charts. And then there's the smaller ranges that we've been sort of triangling into. This is another one of those 11 common Elliott wave corrective patterns. I don't think it's over yet. I think we're going to do a double zigzag. I think we've done the first zig. I think today might have been the X wave down, and we're going to get another A up, B down, and C up before Friday is my best bet. I'm kind of leaning towards the upside as the next move. Probably take you back up towards the highs, maybe even make minor new highs. Remember, just above last week's highs, we have the rollover gaps. It goes from 129.30 to 130.05 plus. I don't know exactly where it starts, but 05 plus is definitely the top of the roll gap in the 10-year, and I can't remember where it is right off the top of my head in the bonds right now. So there is a chance we can go up and fill that gap too and do some kind of a C wave at some point down, the next 3 days before we see some resolution on the non-farm payroll data, which we hope for. So that's the game plan. I'd say my first trade would be to try and buy a dip, but I'm a bit nervous because we didn't see much of a rally after, we popped off the lows. Then equities kept breaking, and then the bonds and notes couldn't get above this like 129.14, 140.10 level at all, really. And then now we're seeing some selling. So I'm thinking between now and the 4 o'clock close, it's about 10 minutes after the pit closes here. We could see a little bit more downside, and then overnight maybe another bounce is my favorite game plan. Play the levels, just be careful right now. Keep it small. These choppy consolidation patterns are tough. Just be careful. Try not to lose too much money, and don't worry about making too much money unless we start breaking out of these ranges. And then we got to be on our toes, ready for the breakout moves that we know are coming in the next couple days. It'll probably be next Monday or something stupid like that. But that's it. Have a great night, guys. We'll see you tomorrow.